The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 11th, magnificent Monday, Veterans Day edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential. Boy, talk about a day to empower human potential, folks. You know, because what we've got to do, you and I, we've got to live up to our potential each and every day. We've got to learn how to master that. So let's begin our day with a set of empowering beliefs. And it is never forget the meaning of Veterans Day. I don't have to tell you how fragile this precious gift of freedom is. Every time we hear, watch, or read the news, we are reminded that liberty is really a rare commodity in this world. The United States and the freedom for which it stands, the freedom for which men and women have died, must endure and prosper. Their lives remind us that freedom is not bought cheaply. It's got a cost. It imposes a burden. And just as they whom we commemorate today were willing to sacrifice, so too must we, in a less final, less heroic way, but we must be willing to give of ourselves each and every day. You know, today, the United States, I believe, stands as a beacon of liberty and democratic strength before the world. We must, you and I, we've got to be resolved to stand firm against those who would destroy the freedoms which you and I cherish. We must be determined to achieve an enduring peace, a peace with liberty and a peace with honor. Our determination, our resolve, yours and mine, it's the highest tribute we can pay to the many who have fallen in the service of our nation. We owe this freedom of choice, this freedom of action to those men and women in uniform who have served this nation and its interest in its time of need. In particular, we are forever indebted to those who have given their lives that we might be free. Folks, freedom is never more than one generation away from extinction. We do not pass it to our children in their bloodstream. It must be fought for. It must be protected and handed on to our children to do the same for their children. Or one day, you and I will spend our sunset years telling our children about our children's children what it was once like in the United States where men and women were free. Folks, it is Veterans Day and a time to remember just how proud we should be to be an American and just how proud we should be to fight for one another. Thank you to each of you, for all of you that have done everything that you possibly can for this great country out there. Happy Veterans Day. Let's go check out these markets out here. Right now, we've got the Dow. It is up 25 points. It's trading out at 15,786. S&P 500 up 2 points at 1772. Composite up 2 points, trading out at 39.21. Russell 2000 slightly green out there. It's up about 7 pennies, so really a flat market. Apple's down $3, Microsoft off 24 cents. Priceline leading the charge, the upside up $33 this morning. Viro Pharma up $10. That's on a buyout. That's up a nice 25% bonus there. Agerian Pharmaceuticals, I don't know if I got that name right, but it's up 10%. AEGR, Intuitive Surgical, up $5. That's up a little over 1%. Tesla Motor having a bit of a bounce here this morning, up $5, nearly 4%. Stratasys, one of the 3D companies out there, up 4% here this morning. Arkansas's Best, ABFS. We'll take a look at that stock chart. That's up a nice 18% here this morning. Leading the charge to the downside, Carl Icahn. Icahn Enterprises off $6, nearly 5%. To the downside, Apple is down $3 and change. Zalicus, ZLCS, down 71%, truly getting kiboshed this morning here. Cirrus Logic off about 11%, down $2.55. Whirlpool down $2 out there. Doesn't look like a big deal. Rand Gold Resources off about 2.5%. That's trading out at 74.62. Our call number is 877-927-6648. Let's start off let's go see what these indexes are doing out here. Big wide price spread on the way down and big wide price spread on the way back up on Friday. On the way down, we had a key reversal session out here. That says that, we've seen really two of these key reversal sessions inside of the S&P 500. So resistance here, 1775, 22 right now. You're traded at 1772.94. Look, folks, you close above that. You close above a resistance level. That says that price would move higher. Where to? Excellent question. Let's take a look at the small A to B equals CD. That's the one coming off of the low from August 22nd all the way up to the high put in on September, let's see, is it 18th or the 19th? 19th is 29. It's the 19th out here out at 1729.86, a retracement down into the October 9th low. Well, the 1-to-1 is that 1776 mark, so if you close above that, you go up to the next floor. What's the next floor here in the S&P 500? That would be 1811. 1811 would be the next move out there. That would take us into the top of that rising price channel. I believe that is the one, that's the one that goes back to 2009. That's the red diagonal line you see on my screen out there. So that would say 1750. That'd be 1850 as the primary trading range boundary. So 1806 is your 1 to 1.272, and 1845 is your 1 to. Wait a minute out here. Hold on a second. I take that back. I was just giving you some bad information. The 1 to 1.618 A to B equals CD would be up at the 1805 level. So that's if we clear above 1776. That's where price will head to. Until it does that, now it's just trading into a resistance area, and pretty strong resistance with these key reversal sessions out here, two of them within a 10-day period of time. So that's what we'll be watching for on the S&P 500 to provide us with some kind of indication as to what it wants to do out here. If we take a look at the Dow, it's up 24 points right now. What the Dow is trying to do is certainly trying to break out above this 1,000 point consolidation. That's the yellow shaded area with inside my chart. If you're watching this on Tiger TV, I'm going to say the confirmation of that inside the Dow. It too had a key reversal session, the high of which is November 7th. 15,797.68 out there. I'll say a close above that, as well as this little trend line here coming off of the high of another key reversal session, which was way back in May 22nd. If you use that high, then you use the highs out here from August 2nd. That'll give you a little bit of a trend line out there. I'll become a believer if we see a close above that, and that'll signal a 1,000-point move. 1,000-point move, that would take you to about the 16,600-ish type level inside of the Dow. If we take a look at the Russell 2000, it has been a weak link out here. That weak link saw really just an inside day, an important, big, no bullishness. Man, I kind of butchered that word, didn't I? No bullishness of a candle out here inside of the Russell 2000, although it did close at its session highs out here. But this the Russell 2000 very close to completing the A to B equals CD down here at Thursday's session. If we draw that in on my screen, I got to grab the right tool in order to draw an A to B equals CD down. Doesn't do me much good to grab the wrong tool and throw a pattern in here. There was your A to B, so it wasn't a complete 1073.88 would have been the level to hit. It got down to 1079, so we'll cut it some slack out here. The Russell 2000, I would have to say here, if you take a look at this trend line, an important trend line out here, this is the one that takes us back to November 16th. We'll really get a feel for the Russell 2000 and if it's going to change its trend when it stays below this area for more than just a couple sessions. What we have seen coming off of that trend line, I'm using the low of November 16th out here, and then I'm using the candlesticks back here in April of 2013. You can see, we've seen it we've seen it get below there for a day back in June 24th, and then boom, right back up against above inside that trend. Really the same thing, same kind of price action that took place here between Thursday and Friday inside of the Russell. So what we want to be paying attention to, bullish or bearish, you're just looking for signals. Doesn't matter to me which side of the market you're on. This is a matter of what did the market do, what is it doing right now, and what are the signals that we need to be looking for. Well, when you consider the Russell led things up, as well as the NASDAQ and the NDX 100, the composite, meaning, as well as the Russell 2000. We really need to be paying attention to these areas here of strength. But so far, it has done what it has done ever since it created or began the trend that we're taking a look at off of November 16th. It has not stayed below that trend line for very long out here. If we see that take place, that'll be an indication that maybe a trend has changed. If we take a look at the NASDAQ composite here, right now, NASDAQ composite, I know I need to update this here. Give me a moment to get that candle because I know that is not. There we go. Now we're taking a look at, the NASDAQ, the composite, the NDX, not having the same kind of action that we saw inside of the S&P 500 and the Dow out here. And just like in the case of the Russell, with it being the lead dog on the way up, the question is going to be, is it going to be the lead dog on the way down out here? So far, I have to say, we'll go take a look at the ETF structure. Let's do that. Let's take a look at the NDX out here. So let me go back to the composite. What's the composite have to do to get over, a resistance level out here? Well, on the daily chart for the composite, I would say the problem here with the composite is that to really try to find real resistance, you almost have to come back to this hammer candle right here. Let me blow it up on the screen. It's a small hammer, but it is no less. It still is a hammer candle. Kind of snuck in there. I didn't really even notice it until I was looking at the charts over the weekend. There was enough of a downtrend here that was established. And this was not if we take a look at the October 30th high of 39.66, it was enough of a move down for this to actually qualify as a hammer candle, this being November the 4th. And we saw that hammer candle broken on Thursday. So the low of which right now is acting, quite frankly, as the resistance level, which is 39.1946. The actual close was 39.1923 on Thursday. So we've seen we've seen the low tested here this morning, the low of that hammer candle. So very subtle out there. So that's what we'll be paying attention to. That's what I'll be paying attention to, is that level, 39.1946 inside of the composite. Inside of the NDX 100 out here, right now that is trading out at 33.61. Looks very similar. If we see a close inside the NDX above Thursday's trading session, to me, that'll qualify as this market wanting to actually break out. So the number to really pay attention to, in my opinion, on the NDX is going to be 33.8920. We see a close above 33.8920. What we will likely see is a move up to about the 34.65, 34.34 range out there. That's what we'll be looking for inside of the NDX 100. If we go take a look at the ETF structure out here, won't have a chance to do it all before the first break. But if we take a look at the Dow Diamonds here, big key reversal session, which looks like that may be tested here today, November 7th high, 157.80. Intra-session, we've been at 157.73. Haven't tagged that area. We see a close above 157.80, though. That's going to have to make us say, something to think about. We had a down session, reversal section, was still a high volume high out there, so maybe that's all the market's trying to do is test that. There were 10 million shares up there. Friday's bounce was 7.5 million shares, so a test of 157.80 on lighter volume. That would be a rejection of a swing point. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 24 right now. S&P is up 1 point out there. A discussion in the den about Smithfield Farms out there. Get some articles in the paper over the weekend. The Chinese buying out Smithfield, and I personally have done some research on Smithfield, and just to try to understand what was so special about Smithfield versus some of the other growers out there. And everybody's focused on the pork side of the business, but the bigger market is the chicken side of the business out there. And somehow Smithfield hams, if you take a look at, it's kind of like if you believe in diversions out here. Well, I think there was a little bit of a diversion here. What Smithfield has done, if you go take a look at how they are able, how they compare to the other big growers out there. And the big growers being, you've got Tyson. I'm taking a look at the public companies. So you got Tyson, where you've got information because it's USDA anyway. So you can get information on really every grower that you want inside of the country. But if you take a look at Tyson, who's got like 30,000 barns, and then you've got Pilgrim's Pride, you've got Smithfield. The fourth one escapes me, the large producer out there. But if you take a look at their average bird weight, and it takes 6 weeks from chicks to the time they move to the slaughterhouse out there inside a barn. So they've got a 6-week growing period. You know, if we're just going to be crude about it and talk about what's really going on inside of their world. In that 6-week period of time, the average bird weight goes up to about 5.3 3 pounds, I believe it is. Tyson's might be just a tad higher than that, but Smithfield sets itself apart from everybody else. It's over 7 pounds during that same 6-week period of time. So I don't know if it's the feed. I don't know what it is that they're doing, if it's the air quality within inside of the hen house. Maybe they've found a way to control the ammonia, which is one of the things that really kills the birds from all their dumping and moisture and things of that sort. But somehow Smithfield hams is substantial when you take a look at technology. When you take a look at an average barn, holds about 22,000 chickens. And Smithfield, I don't recall the number of barns they have, 20,000 barns, something like that out there. But if you consider you got 20,000 chickens, and you got 6-week cycle out there, so you've got basically 6 growing periods, 6.5, something like that. And you take and you multiply that times the weight increase of between 5.3 to 7.3, almost 2 pound difference. Times what? So you got 20,000 in one barn, 20,000, so 120,000 chickens in one barn times 2 pounds in meat. It's big dollars out there, and so there's a reason that the Chinese actually, in my opinion, there's a reason that the Chinese bought Smithfield. Maybe some other reasons as well. But when you take a look at needing to feed the planet and feeding the growth, take a look at the longevity of all of us out here. And now I'm not a big meat eater out there. That doesn't really matter. When you just take a look at what goes on inside the world out here, that's the reason that in my opinion, that's one of the reasons. Now, who knows? Maybe they use the same type of technology. I don't know as much about raising hogs out there. It's not a 6-week period. That much I do know. And so it's a huge. So I don't know what that technology is in Smithfield, but that is one of the reasons why I'm sure that the Chinese, they wanted that technology, because when you start doing the math on it, it's pretty amazing out there. In any event, let's get back to these markets. I know you didn't want to hear about chickens, but I saw the conversation going on inside the den, and just thought I would throw out just a little bit of knowledge out there about that industry and that business. You can do the homework yourself and go check on it, because all of that data is available in the market. So we were taking a look at the diamonds out here. Let's look at the other ETFs. Had a couple of questions about Alta Salon and Fossil, so we'll take a look at that as well here in a moment. Let's take a look at the SPYs. The SPYs here, the key reversal session downdraft from Thursday, top of which is 177.64, 157 million, 177.64. So far we've seen 177.53. We've not seen a test of that high. I would suspect that we will see a test of that high before we get any kind of information released to us. Inside of the Qs here, the Qs, they are struggling. So you can see here in the so-called strength of the marketplace, we're seeing a couple of chinks inside of the armor out here. Qs downdraft on the 17th, volume of 52 million, but up with 31 million shares. There is the potential B to a C of an A to B equals CD down. If we take a look at the just on the daily chart we're looking at, from swing point high to swing point low, what we'll see is a 0.618 retracement. That's normal. 82.62. So far the high today, 82.64. So the Qs could be setting up an A to B equals CD down. What will that look like? It's a small one, albeit, but still a small one out here. That A to B equals CD down would take it to about the price level of 80.60. That'd be your 1-to-1. That would take you right into the gap area created on October 17th to the 18th. When we get back, we'll go take a look at Alta Salon and Fossil. The question is, are they to be shorted? We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Make America the beautiful again. Let's treat our country with the same respect that we give to our friends. Let's all together sing the song we're free to vote and change what's wrong. Let's make America beautiful again.
Thank you, Alberto. That's our producer, Al. Right now, the Dow is up 17. S&P is basically flat here. The other bird grower out there I was thinking of was Purdue. I don't know how it was that I forgot Purdue. You got Tyson Pilgrim's Pride, Purdue, Sanderson Farms. They control 80% of the bird growing population out there, the chicken farms. So I had a question to take a look at Alta Salon and Fossil out there. So we've got Alta Salon on my screen here right now. Now, the question was, I believe the question was, is this the time to go short the either of these two stocks? So let's take a look at the. I like to do is take a look at the weekly charts. I'm going to go ahead and get rid of that long-term A to B equals CD point off of my screen. So I like to take a look at, because the longer term certainly, is going to be the primary trend out there. And so if we take a look at Alta Salon, well, one of the first things you're looking for are areas of support and or resistance on the weekly chart here. And then obviously volume areas. So I would think that the individual taking a look at it was looking at the week of March 15th. So your target area on any short is going to be that high volume weekly low out there. And that's at the high or low. So that's where you're going to be doing your risk reward management. That runs from 72.51 all the way up to 90.53. So wide price spread, accelerated volume to the downside, and that is on Alta Salon. Now, the question is going to be here, as price has moved up, we've seen volume somewhat dissipate. This is a weekly chart, and we've seen some smaller-bodied candles out here. We see, in fact, if I blow this up a bit here, you'll see really two spinning top candles. That's what these things are here, the week of November 1st, the week of November 8th. They don't provide you with any information. They're not reversal signals either. We did get a little doji candle. This candle right here qualifies as a little doji in Stevie's window up here. That says that the high of which is resistance. Doji candles at resistance areas you can actually use. Don't use these as support, but you can use these as resistance. That means the high out here, earlier, well, I think it was during the 9 to 10 o'clock show, spoke about the rising 3 continuation pattern inside of using Japanese candlestick charting out here. If we take a look at that doji, 128.90 is the number. Now you need to see a close above that. A close above that, which we have not seen yet, the actual close, so 128.90 is the number you'll be paying attention to. You were at 128.63 was the close on the week of November 1st. Last week it was at 127.89. So that still is a area of resistance. It has acted as an area of resistance. Now, does that mean that you would go short? No, but if you get a close above it, you've got a continuation move to the upside. To what degree, I can't tell you, but what I can tell you is you would have a no breakdown and a continuation move to the upside. That's what the weekly chart for Alta Salon is communicating to us. Not seeing any kind of reversal signal whatsoever. Just that it's tired. Doji candle just really represents that the market is tired. That's all. If we take a look at the daily chart, let's see if the daily chart, we'll switch this over to a daily, see if this gives us any other signals out here. And much like the market, it had that big down thrust here on Thursday's trading session. Not a bearish candle stick, however. In fact, if I really look around, where is the area of old resistance inside this? I'd have to say, I'd have to probably come back right to, I'd have to say right about here is probably where I would be looking at the last area of resistance that it got above, and that's this little bear sash candle out here. There was a version of a hanging. That's a hanging man. This qualifies as a hanging man candle on October 21st. But as I believe I've pointed out before, to me, a hanging man candle is not a reversal signal. I just can't buy into that theory, no matter what. It's a bearish candle, supposedly a bearish candle, but to me, this says the bulls still have control in a market that's moving higher, so it's not anything that I would short. But this bear sash candle sets up resistance at the trading session of October the 7th. So I would say you wouldn't have a potential reversal signal inside of Alta Salon until you were to see a close above 120 or below 125.15. That's the high of that bearish engulfing candle session out there. The problem that you've got when you take a look at the daily chart is why short Alta Salon when it's got a pretty nice sign of strength here from September 13th, 4.5 million shares out there. So I say it becomes an iffy stock to be looking at from a short, either from the daily chart or from the weekly chart. So I hope that helps out. That's my analysis as I take a look at both those charts and put them together. Now, Fossil's a different story out here. At least on the weekly chart, it's a different story. And the ticker symbol that we're looking at, folks, is FOSL. So, again, we'll look to the weekly chart to give us our better signal with regard to what it is trying to do out here. And then we'll go back, just like we did with Alta Salon. We'll take a look at the daily chart. So on the weekly chart, as we look for any kind of bearish reversal signal, well, the only bearish reversal signal we have is this downdraft out here. And that downdraft session is May 11th. And it was down with big volume, 30 million shares. And so what Fossil has done is it's fought its way up there. It has most likely done it on light volume. It has not been able to close above that breakdown area, the breakdown area being 129.13. And last week out here, as we take a look at the weekly candle, we look for candle signals. Potentially you could call this a high wave-ish type candle, means that it's lost its way, but still no real reversal signal on the weekly. It's telling us that it's up against resistance, no question. But that's all that the weekly chart is communicating to us, is just simply up against a resistance area. So if you were inclined to short this one, then this would be the time to actually do it, because if you get a close above that level, so this one might have some decent reward to risk. If you get a close above 129.13, this equity will go ahead and take on the 139.20 level, so you wouldn't want to necessarily ride it up that high. Wouldn't think that you would want to ride it up that high. So back is up against the wall here, hasn't been able to take that out. Volume coming into it last week was 6.4 million shares. Now the problem is that it was 6.4 million shares coming into a swing point that has 17 million shares. So, yeah, let's take a look at that. Let me grab that. Here's the swing point. So now you've got really two tests of a potential resistance zone. I didn't mean to use that. I meant to do this. So in red. And that's a test of this swing point from last week. That's April 6th is the swing point high. Let me pull this back, make sure that's the high. Yeah, so that's the ultimate high inside of Fossil is the week of May 6th. And that swing point was tested and rejected last week on lighter volume. There was 17 million shares on April the 6th, the week of April 6th. Last week was 6.4. So you got really two reversals out there. That would make sense. I can see why you would be taking a look at that. Now let's go look to the daily chart. As we switch to the daily chart, let's see if we've got some breakdown in here, any kind of reversal signal. You got a bear sash candle that took place right here on November the 7th. Volume was pushing lower. Now, because it made a high out there, the question is that a swing point high or low? Could that high be tested? And it could. Here's the problem you've got with Fossil is you've got on the daily chart, you've got this big push higher on August the 6th with 5.1 million shares. So I would say in the case of Fossil, you can see on the daily chart, it hasn't been able to blow through and push lower on that little breakout session from August the 6th out here. So Fossil looks better than Alta Salon as far as a potential short. And what I would do if you're looking at here was the nice short opportunity. Here's a nice island reversal for you. If you take a look at Fossil, it's February 12th out there. That is absolutely a nice island reversal. That was inside of this big gap down here. I can see here's the actual gap. We were taking a look at that wide-ranging bar on the way down, that push lower out here, and 21 million shares. But that window has been repaired. So the window that you might use as a resistance point, it's been repaired. I mean repaired because we've seen it close above the low of that session, and we saw that on this session here from August 6th. That had a nice volume, 5.1 million shares out there. So Fossil is the one that looks the best if you're looking to short either of these two equities. So I hope that helps you out in taking a look at whether or not one should consider shorting a stock. Let's go take a look at the U.S. dollar index. Let's go see what it is doing. Here's the weekly chart for the U.S. dollar index. Looks to me like the U.S. dollar index wants to try to get back inside its rising price channel that it broke through that rising price channel on September 20th. It's trying to make its way up there. Nice big, we see on the weekly chart out here, you can see how important this area of support is. That's this black horizontal line going across my screen. Bullish engulfing candle. Last time price was down there the week of February 8th, and then the week here of November 1st out there. So a very strong area of support inside of the U.S. dollar index. That says that the U.S. dollar index says to me, if I take a look at these candle sessions, it ought to try to get back inside the rising price channel out there. If we look at the, see if anything else here is going on in Goldilocks, silver out here. You've got gold so far down, trading out at 1282 or so. Volume 62 million shares. So volume now dissipating on the move down to test the swing point low, which is what it wants to do. That's the October 15th area at 1251. That's got 110,000 contracts out there. So starting to see gold back off of its volume to the downside. Let's see. How about silver? See what kind of volume we have in today's session inside of silver out here. Blow this up on the screen. Volume so far, 15,000 contracts going into 28,000. So that's looking good as well, but still trading inside the swing point from October 15th. That says a test of $20.49 is in the offing out here. Light sweet crude, as we take a look at that, I've seen a bit of bullish action out here at this 2.6 minute, this little Gartley buy pattern, but more so I'm paying attention to the mere fact it's just working off at this stage. Just simply seems to be working off an oversold condition out there. Natural gas, quick peek at natural gas out here, see if it's doing much. Natural gas here, trading down a bit, trading out at 355. I'm looking at the December contract out here. I still think natural gas wants to eventually trade down to about $3.31, where it gives you the nice next buy-in opportunity. Let's see, what else do we have that's moving in the market today? Let's go take a look at Regeneron Pharmaceutical. Let's look at our core stocks. Let's look at some of our core holdings. Any of you out there get in on some of that Twitter IPO? Well, if you did, there aren't a lot of folks that are in the green, at least on this thing here yet. Take a look at this is the 1-minute chart on the Twitter IPO. Made its high out here. It almost looks a lot like Facebook, doesn't it? Made its high out here at 11 o'clock in the morning. That was on November 7th. Got up to $50 and a little bit of a change. And, folks, as of the time frame here of 9:40 in the morning on Friday, there was nobody that was really in a profit position if you had bought this thing in the market out here. So we're seeing a little bit of a bounce, but take a look at that trend. That trend here is to the downside. Of course, that's just a 1-minute chart, but we don't have a lot of trading data, so I don't know what else it is that we could look at inside of Twitter out here. It looks like it's actually, I don't know if this is really the channel, but let's just try to take a peek at it and see if that might be it. So there's your channel line with inside of Twitter, at least one of your channel lines to the downside. But let's go take a look at some of our real core stocks out here in the marketplace. Let's take a look at IBM, see what it is doing here this morning. IBM is trying to get back inside its consolidation zone, which would be about the 181.10 level. No, can't be 181.10, can it? No, it can't be. It's right around the 182-ish level out here. Right now, trading up at its session highs at 181.73. Volume behind the move here on Friday's bounce, 6.2 million shares out there. If IBM gets back inside this 30-point consolidation, it even though we had big volume blow out of it, it could suggest that it was a false break to the downside. Now, how will we know that? I'll tell you how we'll know that, because what it's got to do as it moves, even if it does move inside this consolidation level, it's going to have to break this descending price channel. We ought to make that red lines out here. There we go. There's the red lines. That's what IBM is doing, is traveling with inside that price channel as well. Let's go look at Apple, see what Apple is doing out here. Right now it's trading off just a bit here, trading down at 515.89, trying to test the lower range out here. That's set up by the B point from August 19th. 513.74. The volume on that is 18 million shares. We saw a breakout above that with 14 million shares and then 19 million shares to confirm an A to B equals CD up. That was on October the 22nd. Now, the test here on Friday, 7.6 million shares going against that breakout session of 19 million shares, going against the B point of 18 million shares. Not enough volume to get back down into the lower part of its range out here. So Apple still has an A to B equals CD to the upside at 572 inside of the marketplace. Let's take a look at Google, see what Google is doing out here. Google had a nice big breakout session with big volume behind that move. The gap here at the bottom of the gap, October 18th, 974, 11.5 million shares to the upside. Let me just make sure I've got all the active live data here. And the move lower on Thursday was 1.6 million shares. Not really a big deal out there. Right now, Dow's up 21, S&P up 1.5. It is Veterans Day. Thank you to each and every one of you vets out there for everything that you've done for all of us here. We'll be right back, folks.
Cause there ain't no doubt I love this land. God bless the USA.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 19 points right now. S&P is up a point, and multitasking is what you caught me doing. Taking a look here at Arkansas Best, ABFS is the ticker symbol, having a nice, healthy morning, up 17%. Let me see here, were they out with the numbers here? They were. Their operating revenues for the third quarter, $623 million versus $577, and $13.9 million to the bottom line versus $6 million out there. That is a nice, healthy beat out there. Now, they provide freight transportation services, and as we take a look at it, I've got the weekly chart up on my screen out here. You can see that it has broken through the rising price, the descending price channel. Let's go ahead and make that red. Now, the bottom, I don't know if I've got the bottom of the price channel correct out here. The top, though, looks to be in, oh, geez, what did I do there? Give me a moment here to go back to the default. Let me see if that works. There we go. Okay. Now let me do this. There we go. Okay, so now I've got the descending. If you're watching us on Tiger TV, what I'm using for my price channel along the top here, I'm using the open session from July 7th a week. It's a weekly chart we're looking at. July 7th, 2006. I'm using the open, which is at 50.21 out here. You got the next close and open on July 18th of 2008 and July 25th, 2008 out here. And what's interesting is Arkansas Best ABFS. It broke out of the the ascending price channel here the week of August 23rd. Oftentimes when you break out of a price channel, you come back and you test it. And take a look at this thing here. Was textbook. It only took me a second to draw in the channel lines out here. So it breaks out, does it with volume of about 1.5 million shares, comes back and tries to get back inside that descending price channel the week of October the 11th. 3.9 million shares, and it says no. Says that on the trading session, trading week of October the 8th out here. So it has broken its downtrend for sure. Now, nice little hammer candle I see down here at the low back the week of April the 9th, and it had a nice little follow through on that next weekly session out here, and then a big breakout the week of May 10th, 2013. So this looks like it wants higher price. What are the next levels now that it's broken through here? Well, if we just simply go from the swing point high, go all the way back to where that price channel began in 2006, down to the low that was here. So 33.77 is the 0.618 retracement out there. That looks like where it is headed to. That's where it's going to run into a little bit of a consolidation pattern. You can see that some swing points out there. So it'll make that 100% move of a move. But nice little gap up today as we take a look at the daily chart. Let's go see what kind of volume is behind this move here. 990,000 shares. So this thing has had a lot of breakouts, no breakdowns here as of recent. So as this thing has come off of the May 2013 area, we've got 1, 2, 3, 4, today being the fourth sign of strength inside of Arkansas Best. So they must have things down here for sure. Don't know what's driving that engine, but they are doing a nice job out here. So, folks, what are we going to do here for our Monday? Well, it is Marvelous Monday. That means we got our man Basil Chapman. He's up next after Basil. Larry Pesavento after Larry. We got Daryl Martin and David White and the Tom O'Brien Show from 4 to 6. As far as this market here, relatively flat. Nothing behind the move. New York Stock Exchange net advancing issues 101. That is not enough in order for the bulls, believe it or not, to truly take control of the market. They need 1,857. So, again, thank you to each and every one of you veterans out there. Thanks for everything that you've done for each of us out here. We owe the world to you. Have a great Monday, folks. I look forward to seeing you tomorrow morning. Take care.
Today, 'cause there ain't no doubt I love this land. God bless the USA.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.